Hello again, this is Alex from MasterChartsTrading.com, and this is market recap for Friday, September 16th, 2017. So first of all, I wanted to again ask for a donation to those for those in favor of those affected by Hurricane Irma. Redcross.org is a good place to do this. I have donated some money myself. I think Florida has been hit hard, and it's definitely in need of a relief. So do make a donation. I think it's a good thing, especially if you trade the markets and you make some money. Give some money to those in greater need. Quite a bit to cover again. Elite membership will be delayed a little bit until October 10th. I need to iron out some kinks, but it is coming along nicely, and I actually will show how to use the Elite indicator in this video, especially with 10 and First Solar and some other stocks. So we'll look at stocks which are again at all-time highs. Junk bonds are confirming the stock market posture. Dollar is attempting to bottom, and we'll look at some of the components. Gold pulled back, and I think we may see a retest of $1,300. Oil is still somewhat indecisive, and natural gas may finally be breaking out of this consolidation mess. Okay, let's look at S&P 500. This is ETF SPY. Well, this is our all-time highs yet again. So this mildly oversold condition basically was it, and we have now fresh highs, and most likely we're going to continue higher. I mean, I don't see a reason. Let me rephrase it. I don't see too many signs right now that we are tapping, that the market is tapping out. Multiple reasons for this. Some of them are that advanced decline lines are confirming the fresh highs. So there is no divergence in the advanced decline lines. In other words, the participation is quite good out of the S&P 500 stocks. We see a strong enough participation by a broad vast majority of stocks to say that we are moving higher, and it's not just a few stocks that are powering the move higher. It's a significant number of stocks that are powering the move higher. So at MasterCharts Trading, we did open a position recently in S&P. I opened myself in Dow Jones. Some people open QQQ, IWM, but I don't think we're rolling over. I don't see a tapping pattern. In fact, here's the weekly chart, and on it I have marked several triangle consolidations, and a no-brainer triangle consolidation is an inside wick. So this is a weekly chart. So for example, here is a most recent inside wick example. Let me zoom in a little more so that you see what I'm saying. So this week right here, the week of September 5th, the range of this week is entirely within the previous week's range. So you can think of it as a triangle consolidation right there. And now we have a clear breakout. Not just a move above the trend line, but actually a gap, and they close above the triangle trend line. So here's that triangle trend line that I drew right there, and we have a breakout. So far, notice that all of those triangle consolidations, and for the record, I don't trade on chart patterns. But some people do, and they like to think in terms of chart patterns. And here's a chart pattern. It's a triangle consolidation with a bullish breakout. You can't get any more bullish than this, I don't think. I mean, these are all-time highs and a close at all-time highs. For QQQ, similar picture. There's this high here from a few days ago, from last week. We touched that same high this week at 146.59, but overall, again, clearly a bullish picture for QQQ. We have confirmation from the advanced decline lines. Notice that if we use this indicator, for example, ITBM, I don't use it, but you know, for beginners, it's kind of nice to have something to grasp to. You know, we can just say, okay, so let's say ITBM becomes negative right there. We're going to say that this is oversold condition, so we're going to look for an entry opportunity. And so we had an oversold condition, so we should be looking for an entry in this area. So that's one way of trading. Here is another way to look at QQQ, another basically triangle consolidation on a weekly chart with basically another breakout to fresh highs, and they break out above the triangle consolidation. And again, I wanted to point out continuously, I want to point out that new traders should avoid shorting clearly bullish instruments like, for example, QQQ, because we had multiple examples of bearish patterns, bearish candlestick patterns, bearish chart patterns, you name it, and they don't work out. The reason being is because those bearish chart patterns are basically opportunities to go long, to buy. And this is what we've been doing at MasterCharts Trading. We look for oversold conditions and we go and buy. Here's IWM, the same thing. Here's a close below the 200-day moving average. Now again, I pointed out that some traders already would consider this to be a bearish sign. Taken in isolation, maybe I would consider this a somewhat bearish sign, but IWM is a major index, and it's a major index that is highly correlated to the general market. So we can see, so here's my, I just have a chart set up. We have correlation of IWM to SPX, and this is a weekly chart going back 9 years. Notice that correlation is very high. IWM basically does the same thing as S&P. So if S&P is not bearish, it was not bearish here because it didn't even get to the 200-day moving average. Why would I treat IWM in isolation and say that IWM is now bearish? So I thought about that this is basically a buying opportunity, and we opened the position at MasterCharts, and we have now a profit again. Dow Jones Industrial Average, granddaddy of them all. I kind of prefer myself to trade Dow Jones, DIA. I have a position in DIA. It's just, to me, this is what I like about DIA, that it pays monthly dividends. You know, some people say it's not a good thing. I say that for my holding periods, monthly dividends actually is a good thing. Here we see advanced decline lines, advanced decline volume lines, and fresh all-time highs in all three. So again, a confirmation from advanced decline lines of the bullish posture. Let's look at some of the sectors. Here's XLF. Here we had all-time highs in XLF and a relatively deep sell-off that was coincidentally stopped at the 200-day moving average. I don't use moving averages as a guidepost of where to buy or sell, simply because they're moving too much, and I just don't like it. I do use, when we get to 10, I'll show you what I use for my indicators. Recently developed this indicator, and I think it's quite useful. On this particular chart, I still see a bullish posture. All-time highs, advanced decline lines, all-time highs. Volume is dragging a little bit. I think this sell-off was due to bonds gaining strongly. Here, bonds stopped gaining and actually lost. So financials, some of the banks, obviously, in the financial sector, have improved. Now, this particular fund has a relatively relatively weak, but not, you know, bearish. You can see that StockCharts technical rank. By the way, you don't have to have an account to have StockCharts technical rank. You can just put in StockCharts technical rank with a free account and find any SCTR for any of the stocks that they follow here on stock charts. I am also not in any way promoting stock charts, I just happen to use them. But you notice here that financials are basically a little bit underperforming. They're not bearish, they're just relatively weak, so to speak. So I still think that we actually still buying it at MasterCharts Trading. We're looking for buying opportunities. Industrials, fresh all-time highs. Also, we opened a long during the recent drop here, and now we're at fresh highs and at first target. XLP. This one again, I'm pointing out. I see a bullish divergence here. I see the advanced decline lines hitting fresh highs. I see index not yet hitting fresh highs, so I see a bullish divergence here. So we also opened XLP at MasterCharts and we're riding it up. Utilities, same thing. This oversold condition was an opportunity, and we went ahead and we opened a long here, around here. Fresh highs, yeah, we dropped a little bit. I think this is because of the bond sell-off. Utilities are related to bonds, but not strongly, I guess is the word. So here's utilities versus United States bonds, or you can put TLT there, it doesn't matter. Here's put TLT in there. It's just TLT doesn't have as much history. You can see that the correlation between utilities and TLT is somewhat positive occasionally, but it is also somewhat negative occasionally. So it's not a very strong correlation. And bonds moving together with utilities could be a spurious correlation, actually. I think utilities are more related to stocks than bonds. Within some of the stock sectors, SMH, this is semiconductors, broke to fresh all-time highs. I'm sure it had to do with NVIDIA breaking out to fresh highs. So yeah, this is looking like a very constructive chart. All right, let's move on to 10 solar. Now I'm long 10. I have a position that I opened like back here in May. And here what I wanted to show is that basically we have a flat consolidation and now a fresh breakout to 52-week highs. So if you're trying to trade it using a pullback, so we need a pullback and then we need to buy, and then we're going to hopefully it's going to go to fresh highs or break out higher. But in this case, there really was not a pullback. It was just, a breakout right there with a gap, fresh highs, a very mild pullback to the recent lows, and then another breakout. So I would call this a flat consolidation with a breakout. So how do I trade it? And it is, again, relatively difficult to trade it because I would be afraid to be buying up here. But then, as of late, I developed this indicator, and this is basically looking at high, low, and average true range of the particular stock. So here we have this breakout above this green line here. And by the way, this indicator, you can see MasterCharts Trading. If you're a current member, I'll give it to you for free. Just ask for it. In the future, do sign up. And we'll once I have the elite service running, it will be a little bit of money, but for now I can actually share it with you for free if you're a member. So in any case, here's what I would be doing. I'll be buying at this green line basically, and then notice how we're already breaking higher. So this will be already a successful trade for me. Here's another stock from the solar industry, First Solar. Notice another breakout here. So the same thing, you can see First Solar, you can plug it in here, and this is like a no-brainer basically kind of indicator. We just see where would I want to be buying. I will be buying right there, the green line, and then just wait a little bit and boom, we have a breakout. So quite easy to use, basically, this indicator. And finally, here's XRT. I think it's trying to bottom. Now this is 52-week close. We have a relatively strong rally. It's a relatively weak stock right now, weak fund right now, but I think it is trying to bottom. And so let's see what would it take for this XRT to become bullish, in my opinion. So let's look at XRT on this particular chart. So I would consider XRT being at least possibly bullish if or when we close. Let's say we just skyrocket and pop to 44.31, above 44.31 here. That would be like a first sign that most likely we're bullish. Ideally, we should see a breakout above this green line, and then I should start buying. So here's that same XRT. Here as a breakout above the green line, we should start buying here. There's a trade, good trade. Then we have another breakdown below this line. It went to blue line, and actually it unraveled. So it doesn't always work. You see, now it's making lower lows. So this indicator will work most of the time, but once in a while it won't work. So I would say that this indicator has a very high success rate. I would say above 90% success rate. All right, to summarize, I think stocks are bullish, and I think we should start continue looking for buying opportunity within this clearly bullish uptrend. Okay, let's move on to the bond universe. Here are junk bonds on a daily time frame. Notice that these are all-time highs with dividends. If you would like to see a chart without dividends, you can do underscore JNK, and it will be a chart with no dividends. I prefer to use chart with dividends because I think it's gives a bigger picture. And the bigger picture, I think, is that these are quote, most important thing is that these are all-time highs, and this is a bullish chart. Junk bonds correlate highly to the general market, so I think this is confirming a bullish posture for stocks. And I see no divergence yet between junk bonds and the stock market. If or when we start seeing a divergence, then we may start worrying about it. But we are not seeing that. In fact, let me show you what I mean by a divergence. Let me see if I could do this for you guys. I'm gonna put price. Let's see if I can do behind price. See if it makes any sense. So for example, right here in 2015, you can see S&P, which is this black line right here, was consolidating flat while junk bonds were going down already. So this would have been a divergence that I would be worried about. And then we can see they both moved lower together. So far, I don't see the same thing here. It looks like we're moving both higher. For example, here was a bullish divergence. We could see in 2016 here, we see a junk bonds moving higher, while S&P was moving lower here, at least up till here. So, this could have been viewed as a bullish divergence. I don't normally use those in my trading, but I do use it as a general analysis. Here's TLT, Treasury Bond Fund, on a 20 plus year Treasury Bond Fund on a daily time frame. These are 2017 highs. I think this is a bullish chart. We're having a normal shallow pullback. How much more pullback we'll get, I have no idea. Maybe we'll stop right here. TLT is quite volatile. Surprisingly, TLT is more volatile than S&P 500. Here's a weekly time frame for TLT. Again, notice that this was quite a strong move higher. I think this is a bullish move. Notice that this bearish engulfing pattern and this shooting star were negated by fresh highs and fresh highs that were on a closing basis. So overall, I think bonds are in a bull market. Whether or not we will see a rollover remains to be seen. The Fed is meeting sometime very soon, so we could see some fireworks in the TLT department. Okay, let's move on to the Forex universe. Excuse me. This is US dollar on a daily time frame. Pretty much anybody you will ask will say that this is a chart that's going down. So I would say that this is a bearish chart. These lows here are now below 2016 lows, and it's really trying to bottom here. So we had this, I guess, 1, 2, 3, 4 day surge, but then on Thursday, Friday, we kind of sold off. So kind of difficult to read into the daily candlesticks. And I'm not even talking about hourly candlesticks for the purposes of bigger trends. So here it's possible that we're trying to bottom, and I think we should go to weekly time frame to see a bigger picture. So here's a weekly time frame for the US dollar, and recent lows are actually close below 2016 lows. So in my book, this is not a good sign, and dollar looks bearish now. We could see a bounce, and again, I wanted to show you my indicator here, so we could use it on the weekly time frame as well. So here's DXY on the weekly time frame. So what I'm seeing is I'm seeing a possible bounce materialize into around 93.16. 93.16 is about here, which actually makes perfect sense. But if I was trading DXY, and unfortunately in the United States I cannot trade CFDs, our non-US counterparts are lucky in that department, I would be shorting it here at 93.16. US dollar versus Japanese yen. This is weekly, and here's where a little bit of a dollar is being pushed and pulled in different directions, because US dollar gained versus the Japanese yen almost 3% last week, but overall US dollar only gained 0.36% because it actually lost versus the British pound and the euro. So notice that versus the Japanese yen, it is attempting to bottom around 108, 107. It is again difficult to say why this is happening, but I'm sure that North Korea is not helping. British pound versus the dollar. Looks like we had a breakout. I pointed out this breakout here back in actually May of this year, and now we had a breakout, pullback, and fresh 52-week highs. So we could do the same, and we can look at British pound versus US dollar. Well, on the weekly, but we can do British pound versus US dollar and slightly more granular on the daily time frame. And here's that breakout. Now on the previous chart I pointed out a potential breakout at May. On this particular chart I would probably look at as early as June, but definitely July of this year, or rather August of this year, July, August of this year. And notice that we have now fresh highs. So again, if I was trading British pound on a daily time frame, I would be buying it at the green line here. And if you need to know where to get this indicator, send me an inquiry. Okay, euro versus US dollar. This is a weekly time frame. We had a breakout here above a strong resistance a few weeks ago, and fresh 52-week highs. I think we're going to retest again this breakout, which would be absolutely normal. So euro versus US dollar. I'm looking at least a pullback to 1.17989, possibly lower, so anywhere between the green and blue lines here. Overall, I think dollar has flipped bearish, and I think if I was trading it, I would be shorting it. I don't trade dollar, I do trade gold, which we'll be covering next. Right, let's move on to gold. So I think gold is bullish. I think gold turned bullish. Let me pull up that chart actually. I think gold turned bullish in March of 2016 with this breakout above previous highs. Now I have my own gold breadth index, which is a experimental indicator which takes into consideration the price of gold, but also the price and the market breadth indicators for the gold miners. It flipped bullish here in March, and since then I was treating gold and gold miners as bullish. So right now it looks like we're seeing a fresh breakout above 1300. Now it is absolutely normal for the security to come back and retest this breakout, and I think that's what's going to happen. I think we're going to see a pullback towards the $1,300 area. And let's look at gold futures, GC one. So here's the gold futures. We're basically already testing this breakout. So I do trade gold. I actually have a position in GDX, but if I was trading gold futures, I would be literally buying them right now. Here's a daily time frame for gold. Here's that breakout above 1300 right there in late August, and 52-week high is now a pullback. So again, I think the dollar is bearish, and this would be very helpful to gold. You know, gold and dollar are basically inversely correlated. Here is GLD on a daily time frame. There's a little bit more obvious. We have a lot of We had a lot of resistance here from this breakdown, retest, attempted rally, finally a breakout. So for now, this breakout looks legit. If we, come back here, retest this area, bounce around it, and then rally, definitely legit. If break, come back here, bounce around 124, 123, break down, that will be a different story. Hasn't happened yet, so my money is on the upside. Here's GDX on a weekly time frame with lots of market breadth indicators. Again, market breadth indicators taken in vacuum, taken separately, don't mean much, but taken together, they paint a picture. And right now, what I'm seeing is I'm seeing a bullish picture. You see fresh highs are appearing within the index. Bullish percent index is a little bit low still, but not catastrophic. So hopefully it will move higher soon. Now, what I am seeing here is I'm seeing resistance for now reaffirmed at the 25 and change area. So here's that weekly GDX, and I think we're seeing resistance in 2580, 2570, 2550, kind of reaffirmed. Ideally, we should gap above this resistance. So when maybe we'll come up and then pop higher. So maybe we'll look at GDX in the elite indicator. So ideally, we should close above 26.89. That would make me warm and fuzzy, basically. So GDX, I have a position. I have a bullish position, long position in GDX currently, and I am riding it higher. Yeah, we're seeing a sharp pullback, but this security is very volatile, so the sharp pullbacks are expected. We are almost oversold. Another of my proprietary indicators you can see that we're getting close to zero line again, and I think tomorrow, Monday or Tuesday, we will be oversold, and that would imply I would want to be buying it basically. So GDX, yeah. So anyway, gold is bullish, and I'll be buying it. Okay, let's move on to oil. West Texas Intermediate, light crude oil. Now, let me actually show you my chart that I showed to my members. Let me see, where is it? Members. And let me show it to you so I'm not making this up. So this square I put there around mid-July. I said this was my ideal area to short oil, and in fact we actually came up there and we bounced off of it. What my problem was that during this entire sell-off, which was relatively muted, I felt like the sellers were not very convincing. And what I mean by sellers being very convincing, I guess, is the fact that I wanted to see strong selling. Like, for example, there was strong selling right there. You can see a red arrow there. I wanted to see a strong selling, and I saw strong selling there. But I just did not see a strong selling here. So I was like, I feel like I don't want to short it. So I just basically stay out of the market. So for now, I actually was proven correct, because you can see that we bounced right back to that same area. And I am yet to see strong selling. So I have a position in West Texas Intermediate, and that is I have no positions. Cash position is also a position. Currently, West Texas to me looks bearish, but notice the selling. This is a weekly time frame. This selling was not very convincing. Notice that there was always buying tails out of the bottom of the candlesticks. There was, for example, here we had a big red candle, convinced sellers. Here we don't have convinced sellers. And then notice this rally on Friday, this last week. Additionally, notice Brent looks stronger than West Texas, whereas West Texas was, is only at $50 and it's just getting close to August highs. Notice Brent is well above the August highs and actually approaching 52-week highs. So that is the problem I see with oil right now, and that is the reason why I'm basically not 100% on oil currently. So I looked at my indicator. Here's UK oil. Notice it is approaching this green line, and that would imply a bullish breakout, especially if we close above it. US oil, notice, is a little bit weaker, but not very convincing. Look, it's kind of just moving sideways, not really going up or down. So sometimes it's best to stay out of the market, and this is one of those times. I think I'm going to stay out of this particular market for now. Natural gas on the daily time frame from June till now, basically it was an ungodly mess. Look at this insane chop both ways. So I'd like to see it on weekly chart actually, because less chop this way. So it looks like finally we're attempting to stop falling, and I think we will go higher from here. My money is on the upside for natural gas. How much higher? Well, I'm guessing at least to this blue line, possibly higher. Okay, if you have any questions, any concerns, please send them in. You can just send me an email through MasterChartsTrading.com. Hit the like button. It would really mean a lot to me. If you have any comments, you can comment below. And of course, share this video with others who might benefit from it. Thanks for watching, and have another great trading week. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now, so please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the successes in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members, so that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trade alert services. Bye-bye.